Major powers are involved, trade routes are blocked, and governments around the world are preparing for war. But beyond the military conflict, another disaster would quietly begin to unfold, a global financial crisis unlike anything the world has ever seen. Wars do not only destroy cities and infrastructure, they also shake the foundations of the global economy. Markets collapse, currencies lose value, supply chains break down, and millions of people face economic uncertainty. If a global conflict like World War III were to happen, the financial consequences could affect every country, every business, and every household on Earth. In this video, we will explore how World War III could trigger the biggest financial crisis in modern history. The first reaction to a global war would appear in financial markets. Stock markets are extremely sensitive to uncertainty. The moment large-scale conflict begins, investors around the world would start selling assets. Major stock indexes could fall dramatically within hours. Companies that depend on global trade, technology supply chains, transportation, and manufacturing would experience massive losses. Investors tend to avoid risk during uncertain times. Instead of holding stocks, they move their money into safer assets like government bonds, gold, or cash. This sudden selling pressure could cause a global market crash, wiping out trillions of dollars in wealth in a very short time. For ordinary people, this means retirement savings, investment accounts, and pension funds could lose a large portion of their value. Another major effect of global war would be pressure on the banking system. Banks rely on trust. As long as people believe their money is safe, the system works smoothly. But during extreme crises, fear spreads quickly. If people start worrying that banks might fail, they may rush to withdraw their money. This situation is known as a bank run. When many people withdraw money at the same time, banks may struggle to provide enough cash. Even strong banks can collapse if panic spreads through the financial system. Governments and central banks might try to stabilize the situation by providing emergency funds to banks, but confidence could still remain fragile. War is extremely expensive. Governments must fund military operations, weapons production, logistics, and national defense systems. During large conflicts, governments often increase spending dramatically. To pay for these costs, they usually borrow huge amounts of money by issuing government debt. If multiple countries are involved in a global conflict, national debt levels could increase at an unprecedented pace. Higher debt levels can create long-term economic challenges. Interest rates may rise, investors may demand higher returns for lending money, and governments could struggle to maintain financial stability. Another major consequence of global war is inflation. When governments spend large amounts of money, they sometimes increase the money supply. If too much money enters the economy too quickly, the value of that money decreases. This leads to higher prices for everyday goods and services. Food, fuel, transportation, and housing costs could rise rapidly. At the same time, currencies might become unstable. Countries heavily involved in war could see their currency weaken compared to others. This currency volatility would make international trade more difficult and increase financial uncertainty worldwide. Energy is the backbone of the global economy. Oil and natural gas-powered transportation, manufacturing, agriculture, and electricity production. In a global conflict, energy supply chains could be severely disrupted. Important oil-producing regions might become unstable. Shipping routes could be blocked or restricted. Sanctions between countries could also limit energy exports. If supply decreases while demand remains high, energy prices would surge. Higher fuel costs would increase transportation expenses, making food and essential goods more expensive. This would accelerate inflation and place additional pressure on economies around the world. The modern world depends heavily on global supply chains. Products are often manufactured using materials and components from many different countries. A global war could disrupt these complex systems. Factories might shut down. Shipping routes could become unsafe. Trade restrictions could increase between nations. This disruption would lead to shortages of important products such as electronics, machinery, vehicles, and medical supplies. Prices would increase, and businesses that depend on global trade might struggle to survive. During times of crisis, investors search for assets that can protect wealth. Historically, gold has been considered a safe haven asset. When financial systems become unstable, demand for gold often increases. Silver and other precious metals may also gain attention from investors seeking stability. In some cases, investors may move money into stronger currencies or government bonds from stable countries. This shift in investment behavior can reshape global financial markets during times of conflict. Perhaps the most serious consequence of a global financial crisis is the impact on ordinary people. When companies lose revenue and markets become unstable, businesses often reduce costs. This may include closing factories, reducing operations, or laying off workers. Unemployment could rise rapidly across many industries. As people lose jobs and income, consumer spending decreases. Lower spending slows economic growth, pushing countries into recession. A prolonged global conflict could trigger one of the deepest economic downturns in modern history. Despite the destruction caused by war, major global conflicts have historically reshaped economies. New industries emerge, technologies develop, and countries rebuild their economic systems. After the Second World War, many nations experienced significant economic transformation. However, rebuilding takes time. The economic damage from a large global conflict could take decades to fully recover from. A global conflict on the scale of World War III would not only be a military crisis, it would also trigger a massive financial and economic shock affecting every corner of the world. Stock markets could crash, banks could face pressure, inflation could surge, and supply chains could break down. For millions of people, the consequences would be felt in jobs, savings, and everyday living costs. Understanding these risks helps us see how closely connected the global economy really is. And in a world where economic stability is fragile, global peace remains one of the most important foundations for financial security.